Apple just had its worst single day in more than a year, shedding over 6% of its value. This is the Milton Brief, Friday, June 26th. Apple just had its worst single day in more than a year, shedding over 6% of its value. This came after the tech giant announced price hikes of up to $200 on its MacBooks and iPads. The company blamed a global memory chip shortage that analysts are calling Ramageddon. Conventional DRAM contract prices surged as much as 95% quarter over quarter as AI hyperscalers locked up supply, leaving hardware makers like Apple competing for what remained. Apple said it had shielded customers as long as it could, but the price increases came as a shock to investors. The sell-off wiped roughly $265 billion from Apple's market value, dragging the broader Nasdaq lower for a fourth consecutive session. The damage was not limited to Apple. The Nasdaq fell 1.1%, the S&P 500 dropped 0.5%, and the Dow declined 0.2%, reflecting a broad market pullback. Apple closed Thursday at $275.15, leaving its total market capitalization still above $4 trillion, despite the sharp single-day drop. Microsoft was also among the notable decliners, falling 3.5% on Thursday as the sell-off spread across large-cap technology stocks. The episode illustrates how AI-driven competition for memory chips is creating direct cost pressure well beyond the data center, now reaching the consumer devices that Apple sells to hundreds of millions of buyers. We will be here every day, breaking down the big moves and the big ideas. If this helped, subscribe to the Milton Brief, and I'll see you in the next one.